In this lesson, you will learn the basic concepts of the recently repealed Corporate Alternative Minimum Tax, or AMT. I know what you're thinking. Why learn about something that was just repealed? Because, in practice, you may encounter tax returns for tax years before the repeal. Not to mention, corporate taxpayers can still claim a refund for certain AMT credit carryovers through 2021. So while AMT is gone, it is not yet forgotten. Again, welcome to tax. Congress created AMT to ensure that no taxpayer with substantial economic income could avoid significant tax liability by using exclusions, deductions, and credits. In other words, AMT acted as a safeguard to ensure that taxpayers paid their fair share. In fact, AMT was extended from individuals to corporations in response to highly publicized cases of corporations reporting large profits in their financial statements to shareholders but paying little to no corporate income taxes. However, the AMT was both cumbersome and complicated, with some experts referring to it as a complex statutory scheme that takes many twists and turns. Not to worry though, this lesson will not delve too deep into AMT details. There are so many other topics we can explore instead. From a conceptual standpoint, it's helpful to visualize the AMT as a completely separate and distinct tax system that ran parallel to the regular tax system. Most corporations were required to calculate tax liability under both systems and then pay the higher of the two. In general, the AMT system operated by limiting or eliminating certain tax deductions, credits, and other preference items. Thus, the first of three steps in computing AMT was to determine Alternative Minimum Taxable Income, or AMTI. AMTI was essentially regular taxable income with numerous adjustments. For example, the AMT system often used longer recovery periods for calculating depreciation expense, requiring an adjustment to taxable income to arrive at AMTI. Another adjustment, called Adjusted Current Earnings, or ACE, increased AMTI for specific items that were excluded from regular taxable income, such as tax-exempt interest, dividends received deductions, the difference between LIFO and FIFO inventory, and a portion of deferred gains on installment sales. Next, AMT was reduced by an exemption amount, which began at $40,000 and phased out as AMTI increased. Specifically, the exemption amount declined by 25% of the amount by which AMTI exceeded $150,000. The $40,000 starting point had not changed since 1986. Finally, the AMT base, which was AMTI after applying the allowed exemption, was multiplied by the corporate AMT tax rate of 20%. The result was referred to as the tentative minimum tax. AMT was thus the amount by which the TNT exceeded the corporation's regular tax liability. A corporation was required to pay any amount of positive AMT. Note that a corporation received a minimum tax credit if it paid AMT. This credit could be used to offset future regular taxes. In essence, AMT was a prepayment on corporate preferences and AMT adjustments. This minimum tax credit is precisely why you are learning about AMT despite its recent repeal. In particular, corporate taxpayers may claim a refund on any AMT credit carryovers, 50% of remaining carryovers in 2018, 2019, and 2020, and a refund on all remaining credits in the tax year 2021. Thus, you will still see aspects of AMT on current and future tax returns for a while longer. Code Section 55E exempted small corporations from AMT, which it defined as those where average annual gross receipts for all three taxable year periods ending before such taxable year did not exceed $7,500,000. For a corporation's first 3-year period, the limit was set at $5 million. As you might expect, the corporate AMT was definitely not cherished by taxpayers, hence its eventual repeal. In short, the AMT was criticized for failing to advance any legitimate policy objectives, such as efficiency or fairness, raising insufficient revenue, reducing the value of investments that Congress intended to encourage with targeted tax incentives, and imposing hefty compliance costs. Although these criticisms were broadly supported in Congress for quite some time, the government's tax revenue loss from AMT repeal was long expected to be substantial. Thus, it took a fairly large overhaul of the federal tax system to remove it.